This is Chuck Carnevale, and I'm the Chuck in the Markets Up Chuck. And there's an awful lot of talk about energy and going green and so on in the world today. So I thought it might be fun to take a look at some solar stocks. I think the solar industry does offer a lot of promise. However, most solar stocks or solar companies are actually just in their infant stage. So I'm going to look at some just from the standpoint of fundamentals and show you kind of what they look like based on earnings on our earnings-driven chart. The first here is First Solar. As you can see, it's been only publicly trading since late 2006. What's interesting is they have had great earnings growth, one of the few that really have. The stock has actually done quite well as far as rewarding its shareholders. It's turned $100,000 since November of 2006 into $438, and that's during a time where the stock market's only had minus 7.7, and it does promise to generate very strong earnings growth according to the consensus of leading analysts following the company. So now let's take a look at another solar company and see how it stacks up to First Solar. This is SunPower. SunPower has had very good earnings growth, as you can see. It's also only been public since 2005. In this case, it has a forecast for good earnings growth going forward, but a $100,000 investment actually would have lost money. And now this is a case that it would have just about equaled the stock market, and I think the real case here was a concept of valuation. Although at today's 18.5 multiple, this may be one that you might want to research a little bit. Now, if I contrast to Ascent Solar Technologies, as you can see, this company is really actually losing money. They haven't made any money as of yet. The stock, came out in the middle of summer of 2006, and after the IPO, it had a real strong rise and then fall. But you can see there's no earnings underneath this company. There's no forecast for earnings going forward, and this, so far has been a losing proposition relative to its time. It's done a little better than the market, but this is all pure speculation. And this is one that you might want to look into to see what the future looks like. But you want to be very careful that what price you pay or what value you pay to buy a company like this. Then the last pure solar play I'm going to look at is a company like GT Solar, and I want you to notice that this company's had decent earnings growth, and still these are all very young companies with very little operating histories. This stock would have actually lost you over half of your money, a compounded loss of minus 51% a year since it's been in business. That might mean it's a bargain now. The consensus is for earnings growth to continue to grow at 40% a year, and you can buy the stock at 8% and has no debt in the balance sheet. This might be a solar speculation, in my view, that you might want to look at. Not a lot of history, but you'd want to learn more about a company like this. Now, for those of you who are more conservative and don't want to, necessarily play the, pure speculation buying brand new companies, you might want to look at a company like United Technologies. It's got a nice dividend yield, good long-term earnings record. This is Sikorsky helicopters, Otis elevator, Carrier air conditioning, Hamilton Sunstrand, but they also make the UTC or United Technologies power fuel cells. Now, this is a very solid, high-quality, large-cap company that is all obviously involved in the solar industry. But the bottom line is, that just because people talk about things doesn't necessarily mean that they're great. You have to do your own homework, as always, and make your own decision. This is Chuck Carnevale saying, I hope this gave you some extra insight into the solar industry. Look forward to talking to you again tomorrow.